as you look at public equities, obviously they're generally more volatile than private assets. As we went into the beginning of January this year, I mean, if we had one theme, it was bracing for volatility. When you look at the volatility factors, first was, the change in government in the U.S., and we could go into that in detail, but if you'd asked us at the beginning of January, I would say that's going to play a factor, and I think it's played a factor, more of a factor than almost anybody thought. So with the new president coming in and putting in tariffs, et cetera, and how you handicap those, it just happens that they, were put in today, the day we're shooting this, right? So, how you handicap that, things could be different by the end of the week, right? But I think when it comes to tariffs, if they're in for a long time on Canada, when I say a long time, and probably a year plus, that's going to be very, very bad for our economy. If it's a negotiating factor, which we'll find out, that's a little bit different. So that's a large factor. The other thing with public equities this year that could brace for volatility is multiples are high. The S&P 500 is trading at about 22 times earnings. If we don't get earnings growth, then it's hard to see how that market and global markets are going to work unless we have earnings growth. And tariffs are going to hit earnings growth. We have geopolitical events as well. They're definitely a factor. And then, as I mentioned earlier, high debt levels are going to be a factor at some point. So, for our funds, it comes down to our 20 stocks in each fund. So it's really stock by stock. It's not just the market. So we're very selective. But when it comes to volatility, it provides opportunity for us because our investment philosophy is really about doing your homework on a name, figuring out the buy price that you want to buy it at, and just wait and be patient and take a longer term view. And so the volatility creates that opportunity for us. That's generally, historically been good for the investment style because it allows stocks to get displaced and us to allocate capital and invest in companies that are high quality companies but inexpensive.